Friends, I welcome you all to our today's session. We'll be discussing about rates of income tax. Friends, in a previous session, we are discussing that these rates of taxes, most of these rate of taxes are prescribed in the Finance Act. So we need to refer to the relevant Finance Act. For example, if you want to know what is the tax rate which is applicable for the assessment year 21-22, then we need to refer to the latest Finance Act, that is Finance Act 2021. Right. So what is that Finance Act? Finance Act is popularly understood as the budget. So you must be knowing in the budget, this income tax rates are included. Apart from that rate, which is specified in the budget, there are some special rates which are mentioned in the Income Tax Act itself. So now I think you got an idea that these tax rates are available in two places. Certain special rates like this. For example, you can take tax rate on long-term capital gain. 20%. It is there in the Income Tax Act. Or let us say tax rate on anonymous donations, 30% tax rate, or tax rate on lotteries, again 30% tax rates. So these are the rates which are mentioned in the Income Tax Act itself. But normal these slab rates which are applicable to the other income of an individual, HUA, company, etc. You can find it in the budget, which is technically is the Finance Act of the relevant previous year we have to refer. So by this time you already know what is assessment year, what is previous year. Is it done? Income is to be earned in the previous year, and that income will be assessed to tax in the assessment year. Is it done? Now you tell me what is the assessment year relevant to us? Which assessment?
Assessment year 21-22.
And assessment year 21-22. And what is the previous year relevant to that assessment?
2021.
2021. So whatever income is earned during the year 2021, that will be assessed to tax in the year 21-22. So we are going to refer now the rate of tax which is applicable for the assessment year 21-22. For that thing, what I'll do, let me first take you to the Income Tax Department website. You have already visited that place earlier. Again, I'm trying to take you to that place. Give me a moment for that. So you'll be learning how to find out tax rate in the Income Tax Department's website. So let me share this screen with you. Yeah, I think now you are seeing this the Google browser.
Yes, sir.
Okay. Yes. Chrome browser you're seeing now. Now let me go to this website www. You see Income Tax India. .gov.in. Okay. Now we are interested in tax rates. So tax rates are available in the study material. Tax rates are also available in various income tax books, but we'll go to the source. The original source for this thing is here. So sorry, I'm going to this site incometaxindia.gov.in. So this is the home page. You already know. And I want the tax rates. Can you tell me where it is available? I'm showing you this page. Where should I go? I think previous class I had shown you. So you can also find out. Can anyone help me? No idea. So let me take you here. Can you read it here? What is mentioned here?
Tax charts and tables.
Tax charts and tables. So if you click here, you are finding out various rates, charts, etc. Here you see. Now where should I go? Can anyone tell me now?
The tax rate.
Tax rates. Fantastic. You see tax rates. If you click here, you can find out tax rates. Okay. So you already know it is tax rate for assessment year 21-22. As well as tax rate for the assessment year. Can you see it here? Which
yes,
assessment?
22-23.
22-23 is also available here. That means the budget, the last budget, and that is Finance Act 21, was containing both the things. it was having tax rate for the assessment year 21-22 as well as the tax rate for the assessment year 22-23. Okay, so now you can see for individuals, HUFs are AOP, BOI, okay, and other artificial juridical person, you see this is the tax rate. Okay, this is the tax rate, up to 2,50,000 nil, 2,50,000 to 5 lakh rupees 5%, 5 lakh to 10 lakh 20%, above 10 lakh 30%. Okay, for 22-23 and 21-22 same tax rates are. Okay, and you already know if the person is whose age is 60 years or more at any time during the previous year. Anytime means anytime, maybe on the last day of the previous year. Okay, we have to see what is his age. If the age is 60 years or more, then up to 3 lakh, there will be no tax. And from 3 lakh to 5 lakh, how much?
5%.
And 5 lakh to 10 lakh?
20.
And above 10 lakh?
30%.
And you have also seen that for assessment year 22-23 and 21-22, the rates are also same. And in case the person who is 80 years or more, here also at any time, then up to 5 lakh, what will be the tax?
5%.
No, up to 5 lakh.
Nil, sir.
Nil. And 5 lakh to 10 lakh, 20%.
20%.
Above 10 lakh, 30%. Okay, this is the tax that you already. Okay. And there is one alternative rate is also available. Okay. Then, yeah, this is the rate for individuals and this is the rate for, you see, Hindu undivided family also the same rate. Up to 2,50,000 rupees nil, 2,50,000 to 5 lakh 5%, 5 lakh to 10 lakh 20%, above 10 lakh 30%. This is also applicable for HUF. It's also applicable for AOP, BOI, and artificial juridical person. For all these kinds of person, this is the rate. Okay. For individuals, for different ages of 60 years or more and 80 years and more, exemption, basic exemption limit is 3 lakh and 5 lakh respectively. For HUF, this is the normal slab. Okay, understood? Now you already know there is a surcharge is also applicable. Surcharge means tax on tax. First you will compute tax. In addition to that, one additional tax. On that tax, further tax will be levied, that is called as surcharge. Right. So if you look at the surcharge, we have to see for the assessment year 21-22. But surcharge is not always applicable. It is when it is applicable where the total income is 50 lakh to 1 crore, it is 10%. 1 crore to 2 crore, it is 15%. 2 crore to 5 crore, it is 25%. 5 crore to 10 crore, it is 37%. And exceeding 10 crore, it is 37%. Okay. Understood?
Yes.
And there is one concept relating to surcharge, which I have not told you earlier. That is the concept of marginal relief. Now, for surcharge, if let us say somebody's income is just 50 lakh. Okay. We'll see to that. Okay. Let us say, you see, surcharge is applicable if the income exceeds 50 lakh. Okay. And let us say somebody's income is about 50 lakh. So surcharge will not be applicable. He will be paying normal income tax. But if it is exceeding, let us say 1 rupee more than 50 lakh, then he has to pay additional tax 10% more. Is it done? So that
Yes,
may
sir.
cause a genuine hardship to a person. Genuinely, just because 1 rupee increase, it may create problem for him. Therefore, what will happen? He will be allowed a relief which is called as marginal relief, if you understand. Friends, earlier we have seen that even if this tax slab is 2,50,000 for individuals, right? And there is a concept of relief under section 87A. Okay. Have you remembered? It is
Yes,
applicable
sir.
to the resident individuals. You can read it. Resident individuals whose income doesn't exceed 5 lakh rupees, they can get a rebate of 87, a rebate under section 87A. And this 87A section says that if the total income doesn't exceed 5 lakh rupees, the entire income tax, that is 100% of the income tax, or rupees 12,500, whichever is less, will be allowed to them as a rebate. So because of this particular section, for resident individuals, if the total income is up to 5 lakh rupees, then they don't have to pay any income tax. Is it clear to you?
Yes, sir.
Yes.
Okay, they don't have to pay any income tax. But the moment it is exceeding 5 lakh, then they have to pay income tax as per the normal slab. Okay, is it clear to you?
Yes, sir.
Okay. So you have seen this example. Now again, I am taking you to that website in tax calculator. Okay. Previous classes also I had showed you. Again, I am taking you to the tax tools. Once again, I want to make you familiar. You are finding out these tax tools. Are you seeing it?
Yes, sir.
I am taking you to the tax calculator. Okay. And here you see for the assessment year 21-22, we are trying. Let us say taxpayer is individual. Let us say, do you want to new scheme? New scheme, I'll be telling you right now. That is section what is 115 BAC will be learning. Okay, this is that. Let us write no here. Male, female, let us take an example of a male. Residential status will be learning. Let us take it exam. So net taxable income, suppose previous classes we are talking about, suppose it is exactly 5 lakh. Then what will be the tax? Tax amount will be nil. But normally, you know, for 5 lakh, there should be certain tax liability should be there or not. How tax liability will computed? So suppose someone's income is 5 lakh rupees. Okay. Are you getting me?
Yes,
So,
sir.
up to 0 to 2,50,000. What is the rate?
Zero, sir. Nil.
Nil. So tax is also nil. Tax is 0. Okay. Now from 2,50,000 to 5 lakh. 5%. Is it not? 2,50,000 to 5 lakh. How much? 5%. Okay.
Yes, sir.
Right. So what is that 5%? How much it comes? 2,50,000 to 5 lakh comes to 2,50,000. Is it not? 2,50,000
Yes.
into 5%. So what should be the tax?
12,500.
12,500. The total tax is 12,500. But what section 87A says? Entire tax amount or 12,500. Whichever is less will be allowed as a rebate. That means 12,500 will be given as a rebate.
Yes.
So that means maximum for 5 lakh rupees, entire 12,000 rupees will be given as a rebate. Consequently, tax amount will be nil. Therefore, even if slab rate is there, if a resident individual is having income up to 5 lakh rupees, his tax liability will be nil. But this is not applicable to a non-resident individual. Okay, so section 87A is for resident individual. Is it clear to you?
Yes, sir.
Okay. And in case income is slightly more, let us say 5,001, 5 lakh and 1 rupees, then also this rebate is not allowed. 87A is not applicable. Okay. So in a normal situation, so you have to calculate tax like this. Plus, you know, when surcharge is applicable, you have to add surcharge. Surcharge will be computed on this tax. When surcharge is applicable, total income exceeds 50 lakh.
50 lakh.
Right. And after that, tax and surcharge you are arriving at. Then you have to, one more thing will be applied. What is that? Can anyone tell me? Health and education cess. That is also 4%. Additional 4% will be added. Is it clear to you?
Yes.
Okay, right. When surcharge is not there, surcharge is 0. So health and education says 4% on the tax only. But when surcharge is there, so income tax plus surcharge will be added. On that, health and education says 4% will be further added to that. Okay. Now, once again, I'm showing you this concept I need to explain you. So 5 lakh you have seen no tax. So 5 lakh one, how much you are seeing?
12,500.
12,500 plus health and education says 4% is added to that. Since surcharge is nil, you are finding out 13,000. Did you understand this calculation?
Yes, sir.
Now let us say instead of 5 lakh, okay, I am making it 50 lakh. Okay, 50 lakh. You are finding tax is calculated, but surcharge is there.
No, sir.
No. Let us say I'm making it 51 lakh. Now what do you say? Surcharge will be there or not?
Yes, sir.
Surcharge will be there. You see, now surcharge is there. And you see, tax and surcharge is added on that thing. Health and education cess is charged. Health and education cess is 4% on tax and surcharge. And in certain situations, surcharge may be 0. Right? Surcharge may be 0, but health and education should be calculated on the tax plus this 0 amount of surcharge. Did you understand this calculation?
Yes, sir.
So all of you, please visit to the income tax department site, some website, and use this tax calculator. You'll be able to understand this. Okay. Now today I was supposed to explain you this concept. What is this section 115 BAC, which I have made it no, right? So this is in fact an option. It's a new scheme, whether we are opting for new scheme or not. Right? What is that? We'll be learning shortly. But few more things let me explain you in the meantime. Friends, I'll again go back to that page that you see tax rates and tax charts and tables. Again, I'm taking it to the tax rates so that you can quickly revise. This is what we have discussed. You see tax rates already, you know. Right, surcharge concept I had explained you.
Yes.
Fine. And this special rate of tax for the Finance Act 2020, it had come for assessment year 21-22. This is a new concept which is applicable. That means tax rates will be little different. Are you finding this is a different tax rate? What is the different tax rate? Up to 2,50,000, it is nil. It was nil in the earlier rate. And from 2,50,000 or above 2,50,000 up to 5 lakh, it was 5%. This is also same. Is it not? Next slab was 20%. Is it not? If you see the previous slab, you see here it was 5 lakh to 10 lakh. How much? 20%. Are you seeing it?
Yes, sir.
Are you watching it? Okay. But here you see what happens. 5 lakh to 7 lakh 50,000. Above 5 lakh but up to 7 lakh 50,000. What is the tax rate?
10%.
And 7 lakh 50, above 7 lakh 50,000 up to 10 lakh. What is the tax rate?
15%.
Above 10 lakh up to 12 lakh 15,000. What's the tax rate?
20%.
Above 12 lakh 50,000 up to 15 lakh. What is the tax rate?
25%.
And above 15 lakh, what is the tax rate?
30%.
30%. Earlier you see for above 10 lakh, it was 30%. But here you see above 15 lakh, it was 30%. Is it done? So now you must have observed that these rates are relatively lower than the previous features. Yes or no?
Yes, sir.
These rates are relatively lower. And you can also see for every 2,50,000 increase in the total income, when the total income is increasing by 2,50,000, there is a 5% increase in the slab rate. It will continue up to 15 lakh. Here you see at every step there is a 5% increase, 5, 10, 15, 20, 25, 30. And here the increases in terms of 2,50,000, 2,50,000, 5 lakh, 7 lakh 50,000, 10 lakh, 12 lakh 50,000, 15 lakh and above 15 lakh. Is it clear?
Yes.
Okay. Friends, this is an optional scheme, meaning it's not necessary that you will be going for this new scheme at a concessional rate. This is an option given to you. If you want, then you can opt for this new scheme. Would you like to opt for it? Rates are low. What do you think?
Yes, sir. Maybe.
Yes, if rates are low, you maybe. But here, friends, you have to understand one more thing. Rates are low, but there are certain conditions to go for the this new scheme. Condition is that certain deductions, certain rebates will not be allowed to you. Okay, so we need to, after that only this concessional rate can be applied. So therefore, we'll be understanding what are the things which are allowed, what are the things which are not allowed. So now I am showing you, I'm taking you to show the PPT files. Yeah, so friends, earlier you already know that income tax rates or the slab rates are available in the budget itself. So the relevant budget we are referring to is the Finance Act 2021. And if you know, in the 2021 Finance Act, the first schedule is important for us. And first schedule has got these parts: part 1, part 2, part 3, part 4. Part 1 talks about income tax rate for the current assessment year. That is for assessment year 21-22. You can find out the rates here. Part 2 talks about TDS rates for the current financial year. This is financial year 21-22. TDS rates will be there in the part 2. Part 3 will be talking about the advanced tax rate and TDS rates for salaries for the current financial year. That means for the future assessment. The future assessment year, that is 22-23, are also available. Since it is available in the part 3, I could show you what is the tax rate for 22-23. I had shown you 22-23 tax rates also. Yes or no?
Yes, sir.
How I could show you? Because it is already available in the part 3. And what was there in the part 3 in the next budget, next you will find out that itself will be copied and pasted here. That means the part 3 will become part 1 in Finance Act 2022. So therefore, rates are known to us in advance. Part 4 talks about certain rules for computation of net agricultural income. That's a different thing, but this is how our Finance Act is structured. Hope you have understood this.
Yes.
Okay. Now, this is the rate which I was showing you. Just you can have a look. This is the rate applicable for assessment year 21-22 for individuals, HUF, AOP, BOI, and HAP. You know this. Is it not?
Yes, sir.
And above 60, but less than 80, you know this is the rate. Up to 3 lakh rupees is exempt. You know this. And above 80, this is the rate. You know this. We have discussed all this. Okay. And you know the application of rebate under section 87A, which says if the total income is less than or equal to 5 lakh, deduction up to 12 lakh, 12,500 to up to 12,500 will be allowed. That means 100% of the income tax or rupees 12,500, whichever is less, will be allowed. And we have seen its effect, but it is applicable only to individual resident. This point you have to remember: resident individuals can have this option. And the moment it exceeds 5 lakh rupees, this rebate will not be allowed. Okay.
Yes.
Right. What is surcharge? I had shown you. You can also have a look. You have already also seen the source from the income tax website. You can check what is the surcharge rate applicable. Now, friends, we are going to discuss about this particular section, that is section 100 BAC, and this is introduced in the budget 2020, and it is effective from assessment year 21-22. That means this particular assessment year 21-22 is the first assessment year when this is applicable. And to whom this is applicable? Only two category of persons. Friends, you know, there are how many category of persons are there? Quickly, can you tell me? Persons. Who can tell me? Examples. Now count with me. One, individual. Right? Second, HUF. Right? Then you can think farm, including LLP. Farm means partnership farm and limited liability partnership farm. So 3 are over. Company, 4. Okay. Can anyone help me?
Sir, association of person.
AOP or BOI? AOP and BOI. 5. Who can tell me? Next. There are 7 categories. You have to say 2 more. AOP, BOI. Who can tell other one? Next one is local authority. And the last one, 7th category, is artificial juridical person, AJP. So in the initial classes, first class, we have discussed this thing. You can refer to section 2, clause 31 to understand the meaning of person. Okay, friends? Right.
Yes.
And this particular provision we are talking about is applicable to only 2 category of persons. Right, 115 BAC is applicable only 2 category of person. Can you tell me to whom they are applicable?
Individuals and HUF.
Individuals and HUF only. So this is the new rate. This new rates one can avail since the rates are consistent, but at the cost of certain deductions and rebates. So these deductions and rebates you will not be getting if you want to apply. Right. And if you go for the new scheme, 115 BAC, you know this is the new rate, which you have already seen in that chart. You can once again, if you want, you can have a look. This is the new rate for assessment year 21-22. Okay.
Yes.
Now, what are the deduction one will not be able to get? You see, these are the examples of certain exemptions which one person cannot get. So when you will be learning the salary chapter, you will understand salaried employees get a standard deduction of 50,000, but if you opt for new scheme, you will not be able to get it. Leave, travel and allowances, certain deductions are allowed, but if you go for new scheme, you will not be able to get it. Similarly, deductions under house rent allowance. Similarly, certain allowances, special allowances which are mentioned under section 10-14 will not be allowed. Deduction of interest up to 2 lakh rupees is allowed in respect of self-occupied house property. So this interest loss is allowed under the head income from house property. That will not be allowed. Okay, chapter 6 deduction up to 1,50,000 rupees, and in some special cases when investment is made in national pension scheme, another 50,000 rupees. This chapter 6 deductions will not be allowed. Deduction under section 80G for various donations made, that will not be allowed. Okay, interest paid for the educational loan under section 80E, that deduction will not be allowed. For interest from saving bank account, 10,000 rupees is allowed normally under section 80A, that will also not be allowed if you go for new scheme. Therefore, you have seen various deductions are not allowed. Okay, so since the deductions are not allowed, so we pay tax on what amount? We pay tax on the total income. Is it not? Yes or no?
Yes, sir.
And what is the total income? You know, the aggregate of income which are derived from all 5 heads. What are these 5 heads? 1, salaries. 2nd, income from house property. 3rd, profit and gains of business and profession. 4th, now help me. What is the 4th one? Who can tell?
Capital gains.
Capital gains.
And 5,
Other
Other
sources.
sources.
come from other sources. That is income from other sources. Okay. These 5 heads income has to be aggregated. Then you know 2 adjustments has to be made. One is clubbing provisions. Certain other person's income may be clubbed if clubbing provisions are applicable. That also has to be adjusted. Yes or no? And one more thing, clubbing provision has to be applied if some other person's income needs to be clubbed, that will be clubbed. Then one more thing. What is that? Setup of carrying forwarded loss. If some losses was there in the earlier years and for which return has been filed in time, that can be carried forward and set up in the current. So that adjustment has to be made. After that, you'll be getting gross total income. From that gross total income, chapter 6 said deductions has to be made, you'll be getting total income. That total income will be taxable. Is it not? Are you getting me?
Yes, sir.
Right? So total income will be taxable. Now, when we are learning this new section, that is 115 BSc, then what this section says? That certain deduction will not be allowed. When deductions will not be allowed, your total income will be more or less.
More, sir.
Total income will be more. Right? Suppose with deduction, your total income is 5 lakh. Without deduction, it can be 6 lakh. Is it not? So whether this new scheme is beneficial to you or old scheme is beneficial to you, so you need to check, you need to verify. After that only you should be able to take a decision. Right? Because it depends that what are the kind of deductions you are availing. If you're availing good amount of deductions, then new scheme may not be beneficial to you. But if you don't have any deduction, maybe new scheme is beneficial for you. So blindly we cannot say that up to what income which scheme is better, we cannot say. We need to check it out. Okay, how to check it out? Let us go to once again, let us go to the Income Tax Department's website. Let us go to the tax calculator. Are you ready? Should we go there?
Yes, sir.
Now I am again taking you to the tax tools. Okay. Now please guide me. Where should I go? Tell me. Where should I click?
Tax calculator.
Tax calculator. All of you are sure? So I expect all of you should try it today. Please visit to the tax calculator and check it whether it's working or not. Tax calculator. Okay. Just a minute. It's opening. Now assessment year 21-22. Taxpayer. Let us say an individual. Now here it is saying whether you are opting for new scheme, the 115 BSc. First you will say no, that means normal scheme. You select any category of person, male or female. This time I am selecting female. So it doesn't make any difference whether you select male or female. There is no difference in tax rates. Residential status I am selecting individual. So let us say here I am selecting 6 lakh. Amount I am selecting, I am paying 6 lakh. You know this is the tax.
Yes, sir.
Okay. Now let us say what we will do. We'll go for new scheme. So everything let us say same, but I am selecting here what? Yes. Yes means what? I am opting for section 115 BSc. Meaning I am opting for new scheme. Okay, first let me once again, I expect you to remember. First, no. When it was no, what is the tax liability? Can you remember?
33,800 total.
33,800. Now, if I'm making yes, I'm making it yes. What is the tax liability?
23,400.
Now, which is less?
New. This one's a new one.
New one is normally less provided there is no deduction. But if there is some deduction, then what will happen? Under new scheme, this total income will not be 6 lakh. It may be 7 lakh rupees. Or let us say you are already having, let us say you are having deduction under section 80C, 1,50,000 rupee deduction we are making. So now the deduction will not be made, not be available. So 6 lakh will become 7,50,000. Is it not? 7,50,000 you calculate. Sir. What is the 39,000? Now you see new scheme is more.
Yes, sir.
Because the total income under new scheme is 7,50,000. It is 39,000. Tax is 39,000. But old scheme, it is only 60,000. 60,000 I will select no. 33,800. So from case to case basis, in each case you need to check which scheme is better. You cannot blindly say that this scheme is better. You have to understand what is the amount of deduction that one is going to sacrifice. Is it clear?
Yes, sir.
Now, new scheme is better for a person who doesn't have any deduction. Let us say a very senior person who doesn't want to make any investment. Maybe he may not be getting any ATC deduction. Then what he can do, he can go for new scheme. So it is an optional scheme. But since it is a new concept, a new scheme, from exam point of view, definitely important. Okay,
Yes, sir.
understood it? So here is a comparison on the basis of certain assumption up to which income new scheme is better, up to what much of income old scheme is better, up to what income new scheme is better. But instead of seeing it, instead of remembering it, I think you've understood the concept. You yourself can try and find out that what scheme is better for you. If investment is minimal, then 115 BAC new scheme may be better. Otherwise, old scheme is better. There is no set formula to decide which scheme is better. Each case you have to try yourself. Here is one more comparison, but that may not be relevant. Okay, friends, you got I think fair idea about this. Okay.
Yes, sir.
Now, few other tax rates I will be telling you that let us say tax rates for firms, companies. So let us once again here I can show you in the slide, but instead of showing it here, I'll be taking you again to the income tax department's website so that you can see it from the source itself. Again, I'm taking your tax rates and charges. Let me take you to tax rates. Now, these are the rates we have already discussed. Right. Now you see what is the tax rate for partnership. What is the tax rate? Can you read it?
30%.
30%. There is a surcharge of 12%. We'll be learning that. Okay. Okay. Where the total income exceeds 1 crore, surcharge, I will be telling you this thing. Local authority, you see tax rate is 30%. And for companies,
Yes,
you see tax rate 25% or 30%. Okay. So here you have to see if the turnover of the previous year 2018-19 doesn't exceed 4 crore, the rate is, doesn't exceed 400 crore, the tax rate is 25%. If it exceeds 400 crore, it is 30%. Yes.
Yes, sir.
Okay. Right, understood? And you have to see which year, previous year 2018-19. 18-19 turnover you have to see to decide the tax rate of 21-22. Okay, for what is the tax rate applicable for 21-22? It might be 25% or 30%, but it depends upon the turnover of which previous year, 2018-19.
18-9.
Okay. And there are certain special rates for domestic companies, some concessional rates, 25%, 22%, 15%. These are provided under section 115BA, 115BAA, 115BBA. Okay, so these are the rates. There is one more concept which is called as the minimum alternate tax. We'll be learning that thing. The nature of income for cooperative society, you see this is the rate. Up to 10,000, 10%, 10,000 to 20,000, 20%, above 20,000, 30%. Okay.
Yes.
Okay. So this thing what I showed you right now, let me show you some slides for that. Now you see this thing summarized in this slide. Now you can have a look. Partnership arm, what is the tax rate?
30%.
But additional 12% surcharge if the total income exceeds 1 crore. And it is a marginal relief which is also applicable. We'll see that. Cess is again 4%. There is something called as alternate minimum tax. We'll be learning that. 18.5%. This is the farms and LLP. This is the tax rate. For companies, what is a company? You need to remember the definition which is provided under the Income Tax Act. Don't get confused with the definition of Companies Act 2013. For under income tax, remember this is the definition of the company. Section 2, clause 17 of Income Tax Act defines what is a company. It means an Indian company, body corporate incorporated by or under any law outside India, an institution, association, or body assessed as company on or before 1/4/1970, institution, association, body declared by Central Board of Direct Taxes as a company. So all these 4 category of companies or the category of entities can be referred to as company under Income Tax Act 2013. Meaning of Indian company is also defined. Tax rates are different for domestic company and foreign company. Indian company means which is formed or registered under Companies Act 2013 and includes this kind of companies. You can have a look at this definition of company. You can always read it. This video will be made available. You can pause the video. A recorded video will be made available. So you can pause the video and read it to understand what is the meaning of company, what is the meaning of Indian company. Just have a look. Now, coming to tax rates, it depends upon what kind of company we are talking about. They're different from domestic company and different from foreign company. Okay, so now you can see what I was showing you in that chart. So it is for assessment year 21-22, the rate can be 25% or 30%. Is it not? And depends upon the turnover or gross receipt of 2000 previous year 2018-9. On that basis, it has to be decided. Okay. And for foreign company, domestic company, 25% or 30%. And foreign company, tax rate can be 40% or 50%. 40% is, 50% in which case, if it is the income is relating to royalty received from government or Indian concern, as per some specified agreements. or fees for technical services, then tax rate is 50%. For all other income, tax rate is 40%. Is it clear to you? So for domestic company, there are two possibilities, 25% and 30%. And for foreign company also, there are two possibilities, maybe 40% or 50%. Okay?
Yes.
Okay. So in which case tax rates are more, domestic or foreign?
Foreign company.
Foreign company.
Foreign company tax rates are more. Okay. But now you have to remember one more thing. You have to remember the surcharge. Domestic company tax rates are less, foreign company tax rates are more. But surcharge, in case of foreign company, it is less, domestic company, it is more. Reverse, you have to understand it. You see, surcharge is 7% on domestic company, and for foreign company, only 2%. If the net income exceeds 1 crore. And surcharge is 12% for domestic company, and for foreign company, 5%. If the net income exceeds 10 crore. And of course, there is a cess of 4%, and minimum alternate tax is also applicable. We'll be seeing that. Okay. So if we summarize this thing, this is the surcharge rate. Domestic company, income between 1 crore to 10 crore, 7%. Okay. Foreign company, it is 2%. Income above 10 crore, it is 12% for domestic company, foreign company, 5%. So rates you know, surcharge rates also you know now. Okay. Did you understand?
Yes, sir.
Now you see. In addition to that, certain concessional rates are applicable to specific situation. In some companies, some situation, it may be taxed at 22%. Some cases, it may be 15%. There are different situations, but normal rates we have already heard of. Okay. And in case of company, there is one more provision that means even if you calculate by using this normal rate, company may have to pay a minimum alternate tax, which is called as MAT, which is 15% of the book profit. So the concept of book profit you'll be also learning subsequently. So that is the minimum alternate tax one have to pay. And because of application of MAT, if some extra tax is paid, that can be carried forward for 15 assessment years. In appropriate time, we'll be learning this concept. Right now, we are not covering that provisions of MAT. How to compute MAT, etc. Maybe some other occasions we will learn. Now coming to rate of tax for cooperative societies. You have already seen it. Up to 10,000 rupees, it is 10%. 10,000 to 20,000, 20%. Above 20,000, 30%. Surcharge is 12% if the total income exceeds 1 crore. Okay, are you getting it? AMT is applicable.
Yes.
Okay. For assessment year 21-22, there is one more optional scheme. Okay, here also you have to sacrifice some deduction and you can pay tax at the rate of 22%. Instead of going for this slab rate, you can pay 22%, but at the cost of certain deductions. This is again an optional scheme for cooperative societies. For local authorities, tax rate is 30%. Surcharge is 12%, cess is 4%. AMD is applicable. Okay, so these are the rates for various assesses. We have discussed various kinds of persons. In addition to that, there are certain special rates which are mentioned in the Income Tax Act itself. It's not there in the budget, it's in the Income Tax Act. For example, long-term capital gain 20%, short-term capital gain for equity units 15%, lottery crossword puzzles 30%, tax on book profit 18.5%, anonymous donation 30%. These are called the special rates. Okay. Understood?
Yes.
Okay. Now, with this, we have fairly understood the rates. Now, friends, maybe we need to understand two more concepts. One is what is MAT, minimum alternate tax, basic things we'll be learning, and what is this marginal relief, that also will be understood. So we are planning to learn it in the next session. Next class we'll be learning it. Okay, then we'll move to the next thing. Is it okay? Is it clear up to this?
Yes, sir.
Yes, sir.
Okay, friends, we'll stop here. Thank you very, very much. We'll catch up in your next session. Thanks a lot.
सर एक
Thank you, sir.
क्वेश्चन था
Thank you, sir.
Yeah, friends, one issue is raised now, that if someone is opting for new scheme in this current year, current assessment year, next year, whether he can go back to old scheme? Answer is yes, he can definitely go. This option can be exercised every year if the scheme is available. Right? If scheme is open, then this one can change from old scheme to new scheme to old scheme. Anyone can do. That's it. Okay, we'll stop here. We'll catch up in the next class. Thanks a lot.
Thank you, sir.
Thank you.